traders, it's Danielle. Welcome to this week's episode of Dear Simpler. So this week I got a question about earnings season. What is earnings season? How do we trade it? What do we look for? And what should we focus on as traders? Well, let's dive into that. So first of all, earnings season typically starts when the banks report earnings. This week on Monday, Citibank was one of the first companies, one of the major companies to come out and report earnings. The banks always kick off earnings season. So what are we looking for? Well, number one, you have to recognize that this season is going to be filled with volatility, okay? Depending on the news reports, what the different executives are looking for, if the companies have met their numbers or if they haven't met their numbers, it causes a lot of volatility. So what does that mean for us? Well, especially if you're new, you do want to keep your position size in check, and you always want to make sure when you're putting on a trade that you're paying attention to when the company is reporting earnings. You don't want to accidentally be in a trade during an earnings report, something like that. And then when you're trading a company, you want to make sure that you're placing your strikes and picking your expiration series in a way that it's going to be impacted in the way that you want based on the report. So that could be either number one, trying to avoid the earnings series, or number two, it could be purposely trying to buy options within the earnings series. Why would one do that? Well, let's talk about both options. So first of all, you don't want to accidentally be in a trade over an earnings report. So just make sure you check your calendar. Right in Thinkorswim or in your platform, it should say when the company is reporting earnings. All you have to do is go into your settings menu and turn on your corporate actions. So overall, you want to try to avoid it. But there is a setup that we do, and you're going to be hearing a lot about it in the different videos that I produce, as well as the options trading room. So what is that? It's called the run into earnings. What is the run into earnings, one might ask? Well, the run into earnings, this is a name that we've coined around here, is going to be the time frame that's between about 1 week to about 3 weeks prior to a company's earnings date. So the run into earnings is where the stock price will typically run up prior to that earnings report. Why do we care about this? Well, because this is a tradable setup. So what does that mean? What we do is we look to identify different stocks that have a historical pattern that will run up going into their earnings report. Why would we want to trade this? Well, for two reasons. Number one, we always like to trade a directional trade, right? So we have price that is going higher, but we also like to trade it because IV is going higher. What is IV? IV is the implied volatility, and it's a piece of the option that is expanding, going up and going up, going up into a company's earnings report. Why does it do that? Well, because implied volatility rises going into uncertainty, okay? And an earnings report, by its very nature, is an uncertain binary event, okay? Earnings reports cause a lot of volatility, and for that reason, the implied volatility rises going into the earnings report date, okay? So, as traders, if we know, number one, there are certain stocks where price will run up into earnings, and number two, the IV always increases going into earnings, what we're looking to do is we're looking to identify stocks that this is a high probability bet on. So, like anything else, like any other trading setup, there's never going to be one that's 100% on every ticker every time, but this is one of our favorite high probability methods to use. So, how do we do it? A lot of it's just about the pattern, just like everything else we do. We want to go back in time. We want to look to identify patterns. Some of our favorites are Microsoft, Alibaba, Adobe. Go ahead and check out those daily charts and look and just see how they will typically run up, usually about a week prior to the earnings date, some of them even further in advance. So that's the basic idea, and that's what we're looking to trade. How do we trade it? Well, you're going to see more ideas through various videos that I'm going to publish, but for the most part, the simplest way to do it is just by trading long calls, okay? We like to trade long calls to take the best advantage of price and IV rise going into earnings, and then we also like to get out of these trades before the earnings report. We do not like to be in the trades through the earnings report. Why is that? Well, because that's a very, it's a binary event. We never know. We never know what the report's actually going to be, and the high probability part of the setup is the rise before the earnings date. So, what are the main components of the run into earnings? Number one, a stock that's reporting earnings in the next couple weeks. Number two, we're looking to buy price and IV increase going into the earnings report. And then number three, we're looking to sell those options before the company actually reports, because we don't want to have that risk going through the report. And we also don't want to have to hold an option that is going to be crushed in value via the IV crush. The IV crush is something that happens when you have bought an option that has very high implied volatility, and then the event causing the high volatility disappears, as in the earnings report is now over. So there's no reason for the IV to be high anymore. So when the IV was all the way up to here, it gets to a point where after the earnings report, boom, it will get crushed. And at that point, your option's going to be worth less. So that's why we don't hold it through earnings. If you want to see some of these setups, make sure you watch Simpler Playbook at the end of the week. We're also going to be starting a new series this week, and it's going to be called the Midweek Update. So look for that. I'll find some good run into earnings setups, and I'll let you know where they begin and where they end. Thank you so much for your questions. If you have another question for me, make sure you go to your foundation dashboard, go to Dear Simpler, type in your question, and I'll get back to you in the next episode. Thank you very much and good trading.